Hello and welcome, dear traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is May 26 and we're starting from euro-dollar pair with Jakub Nowak as usual. But first, let's have a look on a 5-minute chart for analyzing yesterday's transactions. The test of 1.0720 happened when the MACD line was just starting to move down from zero, which, together with weak GDP data from Germany, led to sell-offs in the euro-dollar pair. However, decline was only 10 pips as pressure eased quickly. Weak GDP data and leading consumer climate index in the UK pulled demand for the euro down, which intensified after the US report an upward revision and its GDP data for the first quarter. Today, ECB Board member Philip Lane will give a speech possibly calling for the need to raise interest rates in the Eurozone. This will help the euro recover and rally by the end of the week. For long positions, buy euro when the level of 1.0743 is reached, and then take profit at the price of 1.0764. Growth will occur, but it will only be a correction. Nevertheless, before buying, traders should make sure that the MACD line is above zero, or is starting to rise from it. Euro can also be bought after two consecutive price tests of 1.0722. But the MACD line should be in an oversold area this time, as only by that will the market reverse to 1.0743 and 1.0764. For short positions, sell euro when the level of 1.0722 is reached, and then take profit at the price of 1.0695. Pressure is likely to persist due to the lack of progress in debt limit negotiations. However, when selling, traders should make sure that the MACD line is below zero, or is starting to move down from it. Euro can also be sold after two consecutive price tests of 1.0743. But the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.0722 and 1.0695. Trading tips for beginners. Paulo Greco with GBP USD pair focused. The GBP USD pair also extended its downward movement on Thursday and broke through the support level of its way of 1.2351. Throughout the day, we saw a slight upward retracement, and volatility remained low. However, the British currency continues to fall regardless of the nature of the fundamental and macroeconomic backdrop. As we have mentioned before, we expect both the euro and the pound to decline as both European currencies have been growing unjustifiably for the past 2 months. Now it's time for a reckoning. By the way, Thursday's macroeconomic backdrop was on the dollar's side. There were no important events or reports in the UK, while the United States released 2 minor reports that came out stronger than expected. These reports include the second estimate of GDP for the first quarter and unemployment claims. Overall, we can even say that we witnessed a logical market reaction to the macro data, but we believe that the pair would have still fallen even without their help. As seen on the 30M chart, The GBP USD pair tried to break the downward movement, as it bridged the trendline lost Friday. However, the pound did not strengthening, and we believe that the decline should continue almost regardless. Moreover, the current macroeconomic backdrop supports the dollar. Gold, sweet gold. The trading plan for this commodity asset is presented by Dimitris Tsoupas. Early in the European session, gold is trading around 1947, rebounding after reaching the 7-8 Muri level around 1937. We can see on the 4-hour chart that gold continues trades to move within the downward channel, but could find strong resistance around the 21 SMA, located at 1961, if it continues to rise. Gold is rebounding, and this could be the beginning of the bullish sequence. The instrument could reach the 200 EMA, located at 1985. And finally, could reach the 8-8 Muri psychological area level of 2000 USD. On the other hand, in case gold falls and consolidates below 1937, we expect that it could reach the bottom of the downtrend channel around 1917. This level could offer a good technical bounce, and from there on, we could expect gold to recover from the downward pressure. In case gold find rejections around 1961 or around the top of the downtrend channel at 1967, it could resume its bullish cycle. In the event that gold approached this zone, it could be seen as an opportunity to sell, with targets at 1937. The Eagle indicator has reached the extremely oversold zone, 5 points. In the next few hours, gold is likely to continue its bounce until the price reached the 1970. There we could buy gold at current price levels around 1937 and 47. Or wait for a technical rebound to occur 7-8 Muri level. And finally, here's Laurie Bailey with AUD USD pair focused. Let's have a look. After successfully breaking down the target level of 0.6567, the AUD USD pair is heading towards the next target level of 0.6424. The target level of 0.6340 is just below it. The signal line of the Marlin oscillator is showing slight upward turn, indicating a slowdown in the decline. From a purely technical standpoint, there are no reasons for the Australian dollar to undergo a deep correction. It may consolidate not exceeding 0.6567. With further movement towards the specified targets. On the 4-hour chart, the Marlin oscillator is in a sideways, with a potential upward move. That could be a reason for an upward correction for price. A correction to the nearest resistance at 0.6567 is likely. That's all for today. See you online soon. Good luck.